Hello everybody, welcome to the first e-news of 2026. Thank you for joining us. Hopefully everybody had a wonderful Christmas and New Year's and holiday celebration. So today we thought we'd talk about sort of what we have been talking about and just dive a little deeper. One being the U.S. economy, where we think 2026 is going to bring us, and then earnings, because earnings is ultimately the most important driver of stock prices over time, is earnings growing. So we know that in 2025, earnings growth was really good, way better than anybody expected. Profit margins are at records, and so at the company level and at earnings level, things are looking really good, which is why stock prices are up as much as they are. And ultimately, we think that earnings growth will continue in 2026. So far, the companies that have reported fourth quarter earnings are still coming in really quite healthy, and so we think that's going to continue in 2026. And that gets me to the economy. You know, there's a lot of things that the market is sort of pricing in that are going to happen actually in 2026 as related to the big beautiful bill and some other things that we think really the U.S. economy is going to grow quite healthily in 2026 because a lot of things that are coming through haven't even hit yet. And so we're quite actually optimistic about GDP growth for the U.S. economy in 2026. A lot of the things that are causing it are going to give us a hangover out into the future. But for 2026, we are quite optimistic about not just earnings growth, but also the U.S. economy. We think the labor market might find some stability. I think we're going to continue to see no firing, but also no hiring. And so there's these weird dynamics in the labor market that we think will persist. But ultimately, I think the U.S. economy is going to grow faster than most people had predicted. And so that should ultimately be good for stocks. The one thing is we are starting to see some changes in what is leading stocks, and it's certainly been good for us and our clients. And so Josh can talk about that.
There's been really a profound rotation in the markets as of late. Diversification and asset allocation are working better than any time in recent memory. The Russell 2000, which is the index of small cap companies, has actually beat the S&P 500 for 9 straight days now. We haven't seen that since back in Trump's first term, back in 2017. A lot of the same themes, deregulation, really investor euphoria were prevalent back 8 years ago when that trend presented itself the first time. But international stocks are continuing pronounced outperformance so far this year. We think just based on all of the allocations that we see across investor portfolios, both of those asset classes are so underowned. Just a mild rotation into them will result in pretty significant outperformance, which is what we're seeing. International developed the same trends that drove the significant outperformance in 2025 are present this year. But interestingly, even the dollar has actually been on a tear the last couple days, and international stocks have still outperformed, which is totally inconsistent with what you'd expect to see, which tells us that there's a rotation of money into those sectors. So we think asset allocation will continue to work. It's really nice to see it working so well. It's been a very long time, of course, since we've seen it work this well, and we are very heartened by the results.
Yeah, so also remember on the bond side of your portfolio, we're still staying short in duration. It doesn't make a whole lot of sense to take much risk in buying low credit bonds or too much duration. And so remember, we want the bonds in your portfolio to be true risk reducers. And right now, the bonds that we own for you are true risk reducers. And so we're going to stick to our guns on that because we need that part of your portfolio.
With the economy running so hot, the risk to the upside in interest rates is real. And of course, with investors' expectation of additional future growth, they're going to want higher compensation in the form of higher interest rates over the long run. So we're going to keep it short in the meantime.
As always, if you have questions about your account or your situation, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We will see you back here in a couple weeks.